Hey, good morning. Welcome to the Mortgage Rate Forecast with Scott Criss, your mortgage rates and news. It is September 21st, and let's start with the charts. We can see some pretty major sell-off here. Now, first thing to understand though, this on September 11th, this was a coupon rollover of about 20 basis points. Technically, it was 18. So this is kind of like when stocks split. So this is not really that big of a deal, but we did see that sell off of another 20 basis points. And we kept touching about 103.40 throughout last week. And then so far this week, we really saw some major movement primarily yesterday with the Fed coming out, but we'll talk more about that later. Here's where we're at today. We're trading about 103.16 this morning. Our support's coming in below us at about 103 and 102.80. So 103, technically you could say 103 and 5 cents. And 102.80 is going to be the next major support, which we saw back in late July. So you can see this downward trading trend that we're developing or have developed. So, we just got to be really careful right now. Reports came out, none of them job friendly, none of them bond friendly. Jobless claims, Philly Fed, both better than expected. So good for your stocks, not so good for the bonds. As far as news, major news was really the Fed yesterday. So the Fed came out. They were a little optimistic on the economy. And so there was even talk of an increase in the Fed rate coming December. So, of course, that's going to already be built in to bond trading. But nonetheless, it does have an impact. That means if the Fed does do an increase in December, we could actually see a slowing in the economy by maybe late January, February. And so we could see a nice little uptick in bonds then. But of course, that doesn't really help you guys now, right? So I would say for right now, be careful. We are in a downward trading channel. To kind of quantify where we're at today compared to national averages, Freddie Mac, as seen down here, reported that in August, 3.88 was the average rate, and the consumer paid a half a point to get there. Now, if we take a look at bond trading, bonds traded in August right about on average about 103.30. So if we're only trading at 103.16, so if we're trading 103.30, but now we're only at 103.16, what that means is we're down about 14 cents. And so if the average consumer paid a half point back then, the average consumer may pay closer to 0.64 points now because of depleted market conditions. So there's where you're at, guys. You're still not too far off from last month, but it is slightly worse, okay? So let's talk about projections. My last projection was a hit. I did hit the mark there. As far as analysis goes, the analysts are pretty consistent on the both short-term and long-term. They're both holding neutral stances, so they don't think that we will continue in this downward trading channel. They do believe that we will kind of level off, and so I think we do need to get some decent footing, so we'll have to really watch it close over the next few days. But I'm going to forecast this. I think we're going to trade probably between 102.90 and 103.25. So that's only a 35-cent range. So that means we could improve by 9 cents, or we could get worse by 26 cents. So I would say if you are in a position of floating right now, if you want to play it safe, may not be a bad idea to consider locking, because I do think we have more room for failure than we have room for upward swing right now. So, but if you do have time, if you have like 2-3 weeks, 4 weeks that you can kind of watch the market, I think it would be okay to consider locking. Just really be careful and watch where our footing is over the next few trading sessions to see if we can really establish a good, solid foundation for us to trade from and hopefully get better. So anyway, that's it for now, guys. I would love to hear from you. Leave your comments down below. Everything likes to be liked. So does this video. Hit that thumbs up before you go. And if it is your first time on the channel, click that guy on the left. That will get you subscribed. You'll get a little update when we do releases. And on the right, if none of this made sense to you, that's Mortgage Bonds 101. That'll give you the basics that you need to know and kind of help you understand how this all bond trading stuff and how that impacts you as a consumer, and it'll help you understand really, if you're gonna try to pick the best time to lock in your rate, it's gonna help you understand the mechanics behind that and why these charts, why these reports are so important. Anyway, that's it for now, guys. We'll see you next Thursday. Have a great weekend. Bye bye.